Hey everyone, welcome back to Drawbridge Finance. My name is Levi Woods. This is an opinion channel only about money. I don't offer any financial advice, and I just am here sharing the knowledge that I've built from being an options trader for the last almost 9 years now. Can't believe it. The time goes so quickly. Today, we're going to talk about defending a Jade Lizard. Jade Lizard is a great little strategy because it has no upside risk whatsoever. It only has risk to the downside. And occasionally, we get tested on these trades. In this particular case, I've got a trade that I put on a couple of weeks ago in Micron when it was trading up at $83. And last Friday, it dropped down to $76. And it passed over my short put. And what I needed to do was make an adjustment so that I could defend the trade and potentially make more money as I'm in the trade as it stands. So today I'm going to show you 5 different choices for adjusting a Jade Lizard that I think are viable. I mean, it's options trading, so you can do whatever you want. There's tons of different things, but I'm going to show you 5 that I like to do. Now, of course, my patrons already know this trade because I entered it last Friday. They know exactly what I did, and you can see that I posted an adjustment on it on July 16th. But originally, the trade that I put on was back on June 28th, and you can see that the trade was a Jade Lizard. At the time, the stock was trading at 83.37, and I put on a trade where I had a short put, a short call, and a long call.
What we're going to look at is this position here. We're going to go over to my portfolio, and you can see the setup is that I have a MU August 20th 80 put. This is a short put. I have 2 short positions in it. I also have these 2 calls. This is a call spread. So I have a short 92.50 call, short quantity, and I have a long 95 call. So I have about $250 risk each contract for that. So this position, all told, was opened originally for a credit of $3.49. Because of that, this position is a Jade Lizard. There's no upside risk because if I collected $3.49 and I only would ever have to pay $2.50 to close the call spread, it means there's absolutely no upside risk. Doesn't matter how high up Micron goes, I will always make at least $100 on this trade per contract. The risk is to the downside, this put, which has actually been tested at this point. The stock is trading at $75.84. Now, my break even is important to remember as well. So because I collected $3.49, my break even is actually $76.51. So the current stock price of $75.81 is actually below my break-even price, which would be the absolute lowest price that Micron could be trading at expiration in order for me to make money on this. Now, the important thing to note is if we look at the price of the actual spread, the 92.50 call is only going to cost $17 to close, and the 95 call still has 12 cents in value, which means it's only a $5 debit total per contract to close this and take off that upside risk that isn't really there, but it would be drawing down profits from my account if suddenly Micron was going to blast up past $95. Now I want to look at strategies to defend this. So the first thing I'm going to look at is actually MU and take a look at the chart. We know that earnings aren't reported until the end of September, so I'm not worried about earnings coming up, even though it is earnings session. And you can see on here I've got I've got my 80 put, which anything above, if the stock is trading anything above 80, it means that I'm going to be in like a max profit range up to 92.5, and then it would be in a limited profit range. But I have quite a large max profit range on this. And then I've also indicated my break even. Now again, my break even is calculated off that $3.49 credit that I received from opening this trade. And here's the stock right now. It's trading down here now at $76. And I need it to be up here above this line in order for me to make any money whatsoever on this trade. So what I'm going to do is look at some possible adjustments that I can make to this trade so that I can actually make some more money off of this. So if I open up the option chain on the left over in IBKR, I'm looking at the August 20th 35 days out. So there's quite a bit of time still left in this trade, and I make adjustments anytime up to about 21-day mark in my particular trading style. I'm going to turn on the strategy builder, and then I can start layering in the positions. Now I know that I'm currently holding the 92.50 call and I'm short it, so I'm going to have to buy it back to close. And I'm long the 95 call, so I can sell that for a credit. And what that's going to do is it's going to generate this small debit to close of about, somewhere between $3 and $5. It makes a lot of sense for me to close this at this point, because if we look at the delta, there's only a 4% chance that it's going to be trading above 95. I really am not doing myself any favors keeping this trade on. If I can adjust it to some higher strikes, then I can potentially make a little bit more credit, and any credit that I collect is going to bring this line down further and expand my profitable range. And it's also going to increase the amount of profit that I could make if the stock was to rally back up above 80 bucks into the max profit range. So that's what I'm going to do. I'm just going to say, okay, first of all, what am I looking at delta wise? I often am trying to roll up
to somewhere between a 16 and 24 delta. Now in this case, I would probably choose to look at either the 85 call or the 82 call.
In the past month, it barely touched $85. So that might be a really great strike to choose. But I also may assume that Micron could even head a little bit lower or stay down in this range that it's been kind of trading in for the last 8 days. And I might say, well, based on this very recent information, I might want to adjust this down even further to say the 82.50, which it's been trading in for the better part of the time that I've been in this trade. So that's the 82.50 with the 21 delta. Based on the chart value, I think that's probably where I'm going to set my short call. And so you can see by selling that, I'll collect 85 cents. So if I go ahead and put that in, this would be one potential adjustment that I could make. I would move this down, close the call spread, and just sell a naked call. And that would give me an additional credit of 82 cents today, which would lower this line down by 82 cents below 76.51. And I can just throw another line in here by going add horizontal trend line at 75.70. So barely extending the range, but still extending the range by that little amount of 80 cents. That leaves me risk on the upside. If Micron were suddenly to go above 82.50 and rally quite hard, then I could be in a potential losing position. It would be creating a strangle out of it. So I would end up with 82.50 call here. And then again, my break even on the top side would be similar. It would be the 349 plus the 80 cents. So it'd have about a $4.30 above. So my break even would be around $86, with the max target range being very tight between $82.50 and $80. So that's one potential adjustment. Now, if I didn't want to take on additional upside risk, it's pretty easy. I had a $2.50 spread on before. I can just buy a $2.50 spread for the new position. So that wouldn't change my risk at all on the top side. It would just change the range at which my max profit would be reduced down to between $80 and $82.50. But I would be doing it for a credit of around 26 cents, which means that this line would be much tighter. It would only be 26.24, and the stock would still actually be trading in a loss zone. Now, I'm not particularly worried about this. I believe Micron's a strong company. There's decent premium in these. So if I have to roll an in-the-money put on this side, eventually, the position that I'm not adjusting today, this 80 put, I'm going to be able to do so for a credit. And when I do that, these calls are going to expire worthless or have even less value because the stock will still be trading under $80. And at that point, I will be able to collect more credit. So I'll get a credit for the roll on the 80, and I'll also get a credit for selling another call spread. And I can just continue to do this month after month. So I don't mind at all when a position like this gets tested at a decent level. Looking back further on this chart, Micron's been up for the better part since December above this $75 range. Now, I'm not saying that it can't break way down. And in which case I have to have my exit plan in place. And if the options go wildly priced, then I have to close that for a loss or take assignment to the stock and sell covered calls. But for the meantime, I'm not particularly worried. I see a little bit of resistance here in these levels already. And unless we see a massive breakout to the downside, I'm not particularly worried. What I'm trying to do is collect as much credit as I can to expand my profitable range. To be honest, 30 cents is not a lot. I'm not particularly loving that. What if I instead of buying the 85 call, what if I buy the 87.50 call? And it cost me 15 cents less. So now the whole thing would generate a credit of $45, which would be bring my net credit up from $3.49 to almost $4. So I have almost a $4 credit for a $5 wide call spread that I would be left with. That means I only have about $100 risk if the stock was to rally past 87.50. So I've still got this max profit range, but then because I've collected a little more credit, I have just an ever so slightly bigger range here for profit, which puts the stock almost in the profitable range right now. Max profit range would still be $80 to $82.50, and then the break even on the top side would be $4. There would also be some additional risk if the stock did break out and traded above 87.50. It could now cost me $100 on this, so adding risk to the top side. So that's a third type of adjustment. Now there's another thing we could do, which is be really super aggressive, and we could roll down to the 80 and create a really tall profit tent. And in that case, we could see how much credit we can collect. It's only 79 cents. So that way we would have the short put and the short call both at the same price. And we would have a $5 spread here, and we would have collected $3.49 plus the 79 cents that we would get today. So we would be at $4.25. So our break even would be $4.25. And then this would be 80 cents below the current price. So that's another choice as well, keeping that. So you have your maximum profit would be achieved if this price was at $80. And then we would make some profit between 75.71 and 84.25. So that would be the new profitable range. Obviously, the closer to $80, the more profitable we are on this. Now, another thing to do is you could just roll right up to a straddle. Again, we could not buy this leg, just buy back the credit spread and sell the 80 call. You would get a credit of $1.31, which would bring $3.49 plus $1.41 would be $4.80. So the new break even at that point would be $4.80 below $80 and $4.80 above. So if I really thought that Micron was not going to rally, or if it wasn't going to have a strong move up, then that is something I might consider right there, because it's definitely bringing my break even on the downside to the lowest possible, and increasing my credit today and hoping that Micron's going to have a small recovery up to $80, but adding a substantial amount of upside risk. I would be losing money for sure if Micron rallied up to 87.50. I think Micron is going to recover from this. I'm looking at this chart and I have the utmost confidence that this stock is going to be trading somewhere between $80 and $95. And in the short term, it may only trade between 80 and 90. So it's a choice that we have to make in our trading accounts. But I just thought I would show you guys a video on the potential adjustments that could be made on a trade like this, because I think it's important to understand that there's a lot of different choices that we can make in order to defend the situation in different ways.
Now, of course, these aren't the only adjustments that I can do. There's actually a whole bunch of different things that I could do. I mean, I could just close the trade at this point if I wanted and take a small loss rather than trying to hold it out in time. But I have no problem rolling in the money puts. Actually, you make a lot of money rolling in the money puts, and if you do them long enough, you will find out that that is very, very true, because if you trade good stocks and they eventually come up, you just get to keep that, all that premium that we collect as we roll them. Now, if you're interested in becoming a patron, there's links down below. You can check out my Patreon where I do live chat every day that's open when we're trading in the market. I am there to answer questions to all of the people that choose to help support the channel. Thanks so much for watching, and let's get rich together.